Hey, Lautaro, how's it going? This is Ryan with TrendLizard.com. Got your email. Thanks for sending it to me. I'm going to take a look at a few ETFs for you today. We're going to take a look at a Taiwan ETF, EWT, an Industrials ETF, XLI, and then the High Yield Corporate Bonds ETF, HYG, in that order. So let's get started here. We'll start with EWT, the Taiwan ETF from iShares, incepted back in 2000, had a lot of back and forth action. Essentially retested its all-time low in 2008. All of this looks like a counter-trend move to me. From there, it has embarked on a much larger up move, going from about 10 to almost 70, about 67.50 at its high, and it's pulled back a little bit off that high. But there could be some debate as to how to label this action off the 2008 low, and I'll show you why we go with this labeling here. And what I'm seeing is a nice trendy 5-wave move to the upside, slightly running ABC pullback for wave 2, and then the start of a third wave advance that still has work to do to the upside, as you can see here, a first and a second wave as that progresses. Now, there would be another way that somebody might consider to label this action, and I want to take a look at that just to be complete. Excuse me. And that would be that you had a first and a second wave, and then you have this first, second, third, fourth going from there to put you a little bit deeper into the progression here off of that 2008 low. And the reason you can see here why we're not going with that labeling is because although it's quite minor, we do get some overlap with that first wave and that fourth wave within that third wave advance, which just doesn't work for us. And I think it's fine when you look at this action here. This action to the upside looks more like a B wave, less like a first wave if it was, the other labeling. So that's why I'm labeling it as a first and second wave, currently in that large black third wave advance to the upside. So let's drill in a little bit more and take a closer look. So this here looks at that action. Basically, I think off the 2016 low. Oh, no, I'm sorry. It actually takes a look at this action here to the upside off the 2020 low. So we have a first, a second wave, and then we want to see where we are in this progression here to the upside. So let's go ahead and zoom back in on that. Again, there's more than one way to label this. Now, I'll show them both to you. We have a nice trendy up move here, really the first pullback of any size as a second wave, and then a sharp third wave, and then all of this being a larger fourth wave. That's one possibility. Another way to label this action off the 2020 low puts it more like a first, second, third, fourth, and fifth completed to better explain why we're getting this larger sideways move that's lasted not quite a year, maybe about 10 months so far, why we'd be getting such a large pullback when we had such a smaller pullback here. This makes more sense. We can't really say for sure either way, but I think this one makes more sense just based on the size of that. And as we drill in, it'll make more sense again. So let's zoom in just on that pullback. And what we see here is that action off of, I think it's the April 2021 high, is counter trend movement that does not yet look over. So you have the sharp down leg here, and then you have this really time-consuming, choppy, messy, slow 3-wave move to the upside into the 2022 low. So this entire move here looks very much like a B wave. It does not look very much like anything else. So that's what we're calling it. And the implication here is that this entire pullback is not yet over. And that sets up the potential of a move back towards May's low, down towards 56. It may not get all the way there. Again, it might be like a slightly running type deal that gets up to 58, 59, somewhere in there. But it just doesn't look over yet. And we're not really getting any type of indication that it is. So I think at the end of the day, what we're considering is that this is a completed up leg. We're getting a larger corrective pullback. That's the important thing too, is that this is clearly a counter trend move. Doesn't look over yet. It does have the potential to move all the way down to this yellow area. Who's to say if it will? Maybe it doesn't. It doesn't, just because that's the Fibonacci support area doesn't necessarily mean it has to reach there. But that's the potential for the move. So I think you have to respect additional weakness as this up leg is corrected here by this ABC pullback. If nothing else, just got to expect a larger correction to form. And we'd like to see a move back towards May, the May 2021 high, before we expect price to turn higher. From there, we would be looking to buy into trendy strength as that next 5-wave advance begins. So there is that guy, EWT, the Taiwan ETF. Let's go on now to XLI, the State Street Industrial Select Sector Spider Fund. We've looked at this one for you before. This chart here just shows its similarity with the Dow. So the red and black line is the XLI, and the black line shows the Dow. So you can see they move very close to one another. So obviously what the Dow does with our analysis on DIA, you can also basically just imprint onto what's going on with XLI and let that ride. So here's obviously the important action here, and this is the move off the 2009 low. Let's look at it just in the light of XLI. And like the Dow and like the NASDAQ and S&P 500 and everything else we look at, we believe that we're in the fifth wave of a very large 5-wave advance off that 2009 low. We have a 5-wave move to the upside, large pullback, second wave, and then another 5-wave move for wave 3. Things got funky here, but as discussed in the past, looks like a large expanded fourth wave pullback that ended at that 2020 low. And then you have a fifth wave up that started off that 2020 low. From a macro, very large point of view, it needs to stay above 70. I don't think that's something we really need to worry about with it trading at 100 right now. I think by the time it got down to 70, we would know that this 5-wave advance is completed and a larger pullback's begun. But that's the line in the sand that we need to keep an eye on anyway. So let's go ahead and zoom in on this action off the 2020 low. So here's a look first at that ABC pullback. And I've said it before, but the reason we're confident that this is just a fourth wave pullback is that the recovery here in 2019 is a 3-wave move to the upside. So it doesn't fit as anything really other than a B wave and then that sharp C wave down. From there, we have a nice 5-wave advance, second wave pullback, another 5-wave advance into the late 2021 high, and then appear to be in the fourth wave pullback of that larger fifth wave to the upside. So that's kind of where we have ourselves. So basically, we're expecting higher prices, but we could be getting very close to an end to that advance off the 2009 low. So we're talking about like a 13-year move. Obviously, when that high is in, we have to be concerned about a much bigger pullback. You would think at least a few years if you're correcting a 13-year move. So that has to be something that is considered. But as is, I mean, we need to be trend followers until that happens. And I think you have to expect this guy to continue higher for now. So remain bullish until there's a sign that something has changed. And if you look at this price action that we've been getting basically over the last year or 10 months or so, it's choppy. It's been a mess. It's been a very difficult pattern to stay up with. But at the end of the day, it's counter-trend price movement. This isn't really how major highs are left behind. So we have to be confident in our expectation for higher prices. And I think that needs to be the over kind of running theory of your trading until there's some reason to think that this 5-wave move is over. And then we see some kind of clue of a pullback from there. So let's go ahead and zoom in a little bit more. This looks at that pullback again, just back and forth action. The thing to take away here is the nice ABC move that we're seeing in 2022, just like we're seeing on DIA and the Dow. After that 3-wave move had completed, or potentially could have completed, we've seen some strength off of February's low that has the potential to be trendy to the upside. Bottom line, it's possible that this fourth wave pullback is over and that price is turning higher from here. If it has, XLI will stay above 96.25 at all times and continue to work its way higher while maintaining trendy potential to the upside. If at any point it moves below 96.25, we just know that this larger pullback is not yet over. That would obviously tell you to be more cautious on the near-term basis until this fourth wave correction completes and that fifth wave up begins. So that's what we're looking at. Let's zoom in one more time. This looks at the advance off of February's low very closely, and you can see it looks like a 5-wave move to the upside. Maybe we're in store for a larger little correction starting next week or continuing into next week. Again, the key level here, 96.25. As long as it stays above there, we're going to see the potential that this is the resumption of the advance in a fifth wave move that has much more potential to continue up to new highs, back above these highs and to a new high in a larger 5-wave move. So we are bullish on XLI. It needs to stay above 96.25 to remain bullish on a near-term time frame. Either way, we expect it to continue higher before this is all said and done. So there's that guy, Latero. Let's take a look at one more. We got HYG, which is the corporate. Let me see. Let me get this right here. The iShares iBox High Yield Corporate Bond ETF. This guy was very tricky to look at. I'm sure, as you know, with your own Elliott Wave Analysis, as I know you do, it's tricky, especially on a long-term time frame. I looked at this for a very long time, longer than I need to look at most things, but I struggled with it, and I'll show you why. So my initial impression when I was looking at this guy with its advance off the 2009 low was to label it as such here. We have a first, a second, a third, a fourth, and a fifth wave. Makes sense. This is the biggest pullback. It makes sense if that was a more important high. These were the other two big pullbacks that have happened over this time frame. The problem here is none of this works. This third wave advance is the shortest of the advancing moves. Therefore, that doesn't work. So I recycled and tried again. The next idea I had was to use the two biggest pullbacks in total. Maybe an extended first wave, a second wave, and then you have a third and a fourth and a fifth now. Problem here, you have overlap between that first and fourth wave. This also doesn't work. So I had to go back to the well one more time and try this action here. I just messed something up. Give me one quick second here. Get back. Now, as we review everything we will talk about momentarily. So yeah, we look at this move here and it has a second wave at the very beginning of the move, and then kind of a very extended third wave advance and a fourth wave pullback with the fifth wave up. This is the best labeling I could find. I don't love it. I certainly don't love this first and second wave here. It's not ideal. Wave 2 retraced a whole bunch of wave 1. It's a little bit problematic, but this is the best I could find without breaking any rules. And I think at the end of the day, basically, no matter what happens, when you get this up leg off of the 2020 low completing, I think you have to be wary at that point, regardless of how you want to label the overall pattern. So I think the focus needs to be on this guy, and when it completes, know that it's time to be more cautious either way. So let's go ahead and zoom in on this action here. So here is that advance off the 2020 low. It's been a little bit of a rounding move here, but I don't think it's over. I have a 5-wave move up for wave 1, a second wave pullback, and then again a 5-wave up move for wave 3, and then a longer, more protracted 4th wave correction that just now has retraced a Fibonacci portion of this 3rd wave up here. It may not seem like it, but it just now retraced more than 38.2% of this up leg for wave 3. So the potential is there that it could be at or very close to a low for this 4th wave pullback, but obviously we need some proof of that. So let's go ahead and zoom in. And this takes a closer look at just that pullback here off of the 2021 high. And you have a very nice ABC down leg to start, which is a good sign. That's a counter trend move, right? ABC moves are counter trend moves. And then you have a retracement of that move. And then you have a sharper breakdown in 2022. Now, again, the possibility is that maybe this put a low as soon as it tested that yellow support area, it's ready to go. Obviously, that theory is going to be tested now as it's pulling back, as it pulled back late last week. If the low is into this down leg, HYG needs to stay above 82.10 at all times. If it moves below that level, then we have a problem. We just have to say that this down leg is not yet over. Doesn't mean it's going to head directly lower. It just means in some fashion the pullback is not yet over, and this is not the resumption of the uptrend. If at any point it can move above 84.75, that's a bullish thing. Obviously, that would look like a pretty solid indication that the uptrend has resumed. Either way, we do think that it will head higher. It's just a matter of timing and whether it can stay above 82.10 and continue to give us trendy movement to the upside. Now, let me see if I messed up these charts. Yeah, I did. So that's my final one there. So we will see if it can stay above 82.10. That's bullish. If it can get above 84.75, that's bullish. If it fails at those tasks, then we just know this 4th wave is not yet over. You just have to wait until you get that final 5th wave up, kind of like the overall market with XLI, with the Dow, SPY, everything else. So, Lau Taro, I hope that is what you were looking for. As always, let me know if you have any questions about this stuff. For anybody else watching this video, I hope you come visit us at TrendLizard.com. We use Elliott Wave to forecast the direction of every major thing that is traded out there on the stock market, market indexes, ETFs, crypto, individual stocks, the works. So come visit us at TrendLizard.com, and y'all have a great weekend. Take care.